Gave me a bolt cutter. He loves to break it. Claim all the space.
Welcome to the Ownership Economy Podcast, the podcast that explores the people and ideas that are utilizing technology, economics, and the law to reimagine how the economy can work for everyone. Here we connect with the entrepreneurs, investors, thought leaders, academics, and politicians that are constructing the ownership economy by expanding access to broad-based ownership and democratic governance. I'm Martin Smith, and I'm joined by my co-host, Jahed. We are two investors and operators that aim to use this platform to showcase the people and ideas that will shape a society that offers more economic opportunity for all. Today, we are joined by Jason Prado, Director of Platform at the Driverless Cooperative. He worked previously at Google and Facebook and has made the switch to a cooperative startup venture that aims to put more governance and ownership rights in the hands of its stakeholders.
All right. Well, thanks for joining us today, Jason.
Hey, it's great to be here.
So I think we can kick this off kind of in the regular way of just saying, can you give our audience a bit of an intro to you as a person, your background in tech, and anything else you want to mention?
Sure. So, hi all. My name's Jason Prado. Currently, I'm the Director of Platform at the Driverless Cooperative, which is a New York-based rideshare service that is building a rideshare and logistics platform, launching in New York City, launched last year, actually. But unlike existing rideshare monopolies, it is 100% owned by drivers. All governance and shares ultimately fall back to the drivers who do the labor on the gig platform. A little bit about my background is I have kind of a more or less traditional tech background. I went to Stanford to study computer science like a million years ago. I worked at Microsoft, Google, Facebook for most of the past 15 years. Started a startup somewhere in the middle there. But along that path in 2015, 2016, I started to read about and learn more about labor and the history of the labor movement in the US and around the world, and became more and more involved in labor struggles in the tech industry. So I've spent about 8 years at Facebook. In the middle of that, got involved in unionization campaigns of groups of workers on campus. So cafeteria workers, security officers, transportation workers, unionized during my time there. And I got to kind of learn about labor struggles up close by working with workers there and doing whatever I could to help out with those campaigns. And that led me over the next several years I worked at Facebook to kind of diverge in my values from the Silicon Valley scene. And then eventually culminated with me leaving in 2020 to work on the Bernie Sanders campaign for a month or two before that wrapped up and the pandemic started. And since then, I've been researching cooperatives and platform cooperatives. And last year, found a role here at the Driverless Cooperative and have been working on this since.
Super cool. So it seems like you've worked in the belly of the beast, so to speak, multiple beasts, Microsoft, Google, Facebook, and then you kind of educated yourself on labor movements, labor organizing to the extent that you can. Because I don't know what you can and can't talk about, having worked at some of these places, but the extent that you can, what was it like to work inside Facebook and Google? Maybe just pick one. Walk us through it.
Sure. I mean, I spent a couple of years at Google, but then almost 8 years at Facebook. And I mean, as far as workplaces go, the day-to-day of working at these places is excellent. That's why people love to work there and they pay well and you get to work with the newest and best technologies and really be at the cutting edge of things. So that's something I will always appreciate about those places. In terms of what I started to see as the problems of working there and being involved in Silicon Valley generally, I guess there's a kind of a culture at Facebook especially, there's a culture of always seeing yourself as the underdog so that, they kind of still think of themselves as this thing running out of a dorm room that is up against the world, which I think leads these companies to make pretty bad decisions about, their role in the world. We're right because we're us is kind of the default mindset there. So it's not that they're not completely not introspective, but there's just this default culture of thinking whatever we do is good because our mission is so important or because, we're up against these really entrenched powers that are even worse. And that they just fail to update their viewpoint as, the Facebook and Googles of the world become some of the most powerful entities on earth and deserve all the scrutiny that a state gets, but they really see themselves as above it. So that's kind of my takeaway of why the big corporate Silicon Valley thing was not for me.
Got it. And then for me as well, and Martin as well, we have, startup experience here and there. We started companies, we work within startups in that 500 to 1,000 and also way below that, area. And so looking at your experience within Facebook and Google, how does it contrast now to working in a workers' cooperative?
Gosh, working at a workers' cooperative is a lot more chaotic. I think we have all the, difficulties of being an early stage startup. We have, I think, about 10 to 15 people on staff now, about 9 engineers. So all the difficulties you'd expect, struggling for funding, like starting from scratch. And then also the difficulties of trying to be worker driven and democratic. So there's some ways that we're succeeding in that. Like drivers are pretty involved in major decisions. They have ultimately like the power to elect the board and set policy. And there's some ways there that's difficult to make decisions quickly and also democratically, I guess. One kind of contrarian thing I like to say is actually Facebook is an extremely democratic organization in that there is a lot of power in the leaves of the organization. Like an individual employee, an individual engineer or worker has a ton of power if you're the right kind of worker and have the right kind of look and have the right kind of like status to really affect major change in the organization. So, and that's because, empowering the leaves of an organization is actually the best strategy to make good decisions and move quickly. And big companies have understood that. They're actually, not as top down as you might think. They're not like the US military or something, but that's all kind of backstopped by this understanding that everyone has one job, and that's to maximize shareholder value and maximize revenue. So long as we're all kind of on the same page about that, then there's a lot of autonomy. So we're trying to recreate like the best of Silicon Valley within this cooperative, but without that kind of guiding principle that we must win at all costs.
Very cool. And I think that's that's a very good point around you get quite a bit of autonomy, mostly because, you're talking about 5, 10, 50,000 person organizations. It's impossible to kind of rule them from top down. So taking the best of Silicon Valley and letting people loose, that is definitely an approach that I'm interested in seeing where it goes, not just here, and we'll get to the Web3 DAO stuff later, but that's definitely something that I think is fruitful for this type of organization. And so then getting it a little bit more into Drivers Cooperative itself, first, Martin and I have been, movement in this space, looking at democratic governance in the workplace, all that kind of stuff for at least probably half a decade or more. And so just for our audience, could you tell us a bit more about what kind of cooperative Drivers Cooperative is? Because there are different types, and then maybe tell us a bit about how it's organized and maybe even on the legal side.
Sure. So we're a straight up worker owned multi-stakeholder cooperative. The ownership shares are only issued to drivers at the moment. We've raised capital, but only on a debt basis. So we haven't sold any equity shares. Nobody has any votes except for drivers currently. And cooperatives do raise equity financing sometimes, and that's fine. But we luckily have not had to just yet. How we're organized, I actually don't remember what kind of legal entity we are, but the important thing is our bylaws establish us as a cooperative. So we have various governing bodies. The highest is the board of directors, just like any other organization. And that is elected by some seats directly by drivers, some seats by staff, and some seats are like independent outsiders, but they're ultimately backstopping all decisions at the organization. The other important governing body is what we call the driver board. So that's a board of 19 drivers elected directly from the membership. They set everything about policy. So, what kind of cut does the cooperative take? What kind of, what are some of our main priorities? One thing that comes up a lot is around policy. So something I've learned in the space is that even though in New York City, almost all for-hire vehicle drivers are full-time professionals, they do this, they're not casual, college students driving part-time or something. They're driving this is their job and their career, and they're very good at it. They take it very seriously. And yet pretty much everyone is kind of scared of this phantom of random deactivation by Uber and Lyft. There's this kind of impression that, seems true from what I hear, that you can have a bad day or just a malicious customer or a string of bad luck, and suddenly you're deactivated from one of the platforms, and half your potential to make money and support your family is just taken away from you, and there's really no recourse. So the driver board at TDC takes on all issues around policy and enforcement and whatnot. So there's a driver in the loop for every decision that affects people's livelihoods. So those are two of the main bodies. We also have lots of advisory committees. So one I work with most closely, we call the product committee. So it's a group of drivers who are interested in the product side of the platform and guiding our roadmap and giving feedback on the product as we build it, because we are building a rideshare platform from scratch. So we meet monthly to get feedback on our roadmap and design, and work pretty closely with them on product issues. So we try and keep a driver in the loop for any major decision. It's not just staff building this thing and handing it down to drivers.
Why do you think that? I mean, have Uber and Lyft done that? do they have kind of a driver's council? And if not, why not?
That's a good question. I think so. There are bodies like IDG, the Independent Drivers Guild, which is kind of a pseudo union that represents drivers' interests, kind of, but is maybe ultimately funded by Uber and doesn't have the ability to negotiate on very important things like wages. So that kind of represents drivers' interests. I'm sure there's plenty of involvement of drivers at these big platforms. I think the mindset of it, though, is kind of different, where it's kind of being conducted from above by the platform owners. So, think of it more like a focus group than a governing body. So, what do drivers think about this? Well, let's go research them, rather than, well, drivers are running this thing and let's empower them to actually make these decisions. Does that make sense?
I think it does. I'm just trying to understand the spectrum here of kind of starting an organization that has guaranteed rights at the board level for the stakeholder, to your experience at Facebook, where you say that the board has kind of empowered the employees to make broad decision for the organization, and they don't have kind of those rights at the board level. The board's completely controlled by Zuckerberg and by the institutional investors. And Uber and Lyft, where you're essentially going up against them and of empowering drivers, that isn't in a traditional organizational structure, and just kind of that spectrum, and how you've been able to do that and why they haven't. Because it's so clear that with all the bad news over the past 5 years, 6 years for Uber in particular, but Lyft as in addition, that this is something they should do.
Right. I think it comes down to class location of the workforce. So most people at a tech company are college educated from an upper tier of class society. Whereas in for-hire vehicles in New York City, over 90% of drivers are immigrants. Most are tons of people are people of color. We speak maybe 10 to 15 languages commonly in our workforce. So I think it's hard for a certain kind of elite to look at this group of people and think that they could run this themselves. So that's the experiment that we're investing in.
Got it. And then feeding into this, you mentioned, Uber and Lyft, when you look at some of the things that they've been doing in the last couple of years, not just on the, politics and lobbying side, but just in terms of their R&D spend, we're talking about massive amounts of money, right? $1 billion a year from Lyft and multiple billions a year from Uber. And when you look at that, and you consider some of the, I wouldn't say necessarily disadvantages, this is a different way of working, right? You're going to come to decisions more democratically. They might actually open up new avenues and possibilities for your business. How do you kind of think about that space? What is the competitive advantage for worker ownership in the space when you're up, if you can even think of it as competitive advantage, right? But maybe is that even the terms you think of it in when you're thinking of Lyft and Uber and what you guys are doing?
Sure. I mean, we're competing in a marketplace. They're the competition. We live under capitalism, and competition is the way that winners are decided through the market. So we do think of it like that. We also understand we have a different set of goals than Uber and Lyft. So these major monopolies have raised so much capital that the only way they can recoup for their investors is by winning large monopolies, regional or along different verticals. They have to win those monopolies and then charge monopoly rents in order to justify their just outlandish valuations. So that means they have to spend billions of dollars in R&D. They have to do it against each other. They have to there can be only one in the monopoly space, or they have to find a way to cleave the market that they can both get their monopoly rents in different ways. That's not our goal. And we need to grow, or that growth is our objective as well, but not necessarily that kind of growth at all costs, parasitic growth. So for a cooperative like us, we're successful if we serve our members and we're sustainable. We also want to grow in addition to that, but we don't need to have 99% market share right away to please our investors, or else they'll replace our CEO or something. So in terms of competition, we think we are attractive to drivers. So on the labor supply side, we charge less of a cut than Uber and Lyft. Our experience is getting better and better of being a driver, and we hope to be pretty close to where Uber and Lyft are by the end of this year. So we're hoping to be able to put more money in drivers' pockets than Uber and Lyft can per ride, and we're on track to do that. So, and we also give drivers a way to control their workplaces, right? I mean, wages are super important, but also a sense of security and ownership in the place you work at is always important as well. So it's on the driver side, kind of an easier pitch there. On the consumer side, it's obviously harder, right? Because what does the consumer care about? An easy experience, fast pickup times, and low costs. So we can get competitive there over time, we're pretty sure. But if we're not hyper exploiting our workers, like maybe costs are going to be a problem for a while. A few things we're thinking about here have to do with like an ethical consumer viewpoint, at least for the initial phase of our business. And then over time, just being able to do things a lot cheaper. So, there are people who shop at the local grocery cooperative. Like I get most of my groceries from the grocery co-op down the street because I like that it's a worker-owned cooperative and I like their products. You could imagine 5 to 15% of consumers are able to make decisions this way and are interested in doing so. And if we peel off 5% of New York City rideshare traffic, that is a massively successful business, right? And again, with our goal of sustainable growth and doing well by our members, that is a successful case for the drivers cooperative. So we can view that as the goal for the next few years is to get to that level of growth and then to expand to other cities to do the same there. Moving beyond that is obviously going to be hard because, our competitors can raise just essentially infinite amounts of capital to expand or to lower prices temporarily to undercut competitors or move into new markets. So that's going to be a big challenge for sure. And we have some ideas there, but our focus for now is definitely just to get to a sustainable growth level.
Okay. Well, I guess I have a question on kind of the end game here, right? Because these R&D investments that Jahed's brought up are contributing to driverless future, right? Where effectively you've got better utilization of this asset, which has a bunch of positive benefits for society, right? You have lesser congestion in cities. You've got decreasing carbon emissions because they're more fuel efficient, and effectively the higher utilization rates leads to better sustainability impacts. And so I'm just wondering, kind of in the end game here, how do you see drivers cooperative being a place for this labor class to continually have kind of good employment and good wages in this environment where you've got two major players that, as you mentioned, can go out and do, they're both publicly traded now, so they would have to do secondaries, right, to raise more capital or get new debt in or just use their cash flow. But how do you see the end game here with kind of the vision for drivers cooperative in this world that probably is going to move to driverless vehicles and labor not actually being in the car?
Sure. So one premise I want to question is this certainty or the technological determinism of, somebody had this idea that we're going to build self-driving cars. There's been some early promise and some early difficulties with that technology. But this assumption that we'll be there in like 2 years or 5 years is kind of, you see it a lot in like the tech press, but it doesn't feel super likely to me. So the timeline is probably longer than anyone is thinking. But we will end up with driverless cars eventually, probably more years from now than like people are commonly saying. It also probably won't be the entire industry for quite a while. It might be like a lot of rideshare, but there's lots and lots of times you actually need, a person in the car. For instance, one of the main kind of trips we do right now is accessible paratransit in New York City. So that's people with wheelchairs, people who sometimes need assistance, like a step stool getting in and out of a car. So we're very happy to be doing these kind of trips because they have a good like social impact as well as they're good revenue for us. Those trips are not going away anytime soon as well. But then beyond that, we need to be thinking about just transitions for workforces in all kinds of ways. As a society, draw down from fossil fuels. The people who work in fossil fuels need to be taken care of. As we draw down from rideshare towards self-driving cars, the people who make a living, doing rideshare and have in the tradition of taxis for hire vehicles for a century, these people, deserve a way to take care of their families as technology and society shift underneath them. So as a socialist, I generally think like labor is the starting point for any kind of action, organized labor. So how are we going to demand that as self-driving cars take over this industry that employs millions of people, those people aren't left destitute, right? We have a policy committee within the drivers cooperative that helps organize our drivers or helps drivers organize themselves around our policy goals. So this includes, they're working on their platform now, but likely things to end up on it include a transition to electric vehicles. The state has an interest in assisting us to transition to EVs. And just the same, I think that if self-driving cars replace a lot of the workforce in logistics and for-hire vehicles, then the people who are working in those fields need to be taken care of. They need to be paid. They need to be given access to training programs. That's in the interest of our drivers. It's also in the interest of our society to not suddenly put millions of people out on the street. So the way to demand that, well, let's just say that like the gig labor monopolies of today don't need to demand that. They have no interest in doing so, right? Because they're responsible to their shareholders, not their workforce. But at the Drivers Cooperative, and if this kind of model were to grow, you have an organized base of labor to say, hey, we make these demands collectively and have a much greater chance of like winning these demands because we're acting together in concert.
So I just want to push on that a little bit more, right? Because I think like I understand kind of, and Jahed and I are both sympathetic to kind of the Drivers Cooperative. And so I don't want this to feel like an attack in any way. But it seems like this concept of labor versus capital and black versus white and cooperative, black versus white in terms of kind of no shades of gray in between, cooperative versus VC-backed tech company actually doesn't really get at the type of humans we are today, which is we're both laborers and we might have shares in companies, right? We act in different environments. You can have an Uber driver or a Lyft driver that likes the high utilization on those platforms because it allows them to have a life outside of that job and then can go do that job when they're transitioning, right? And so I'm just wondering if I want to push on kind of this kind of end game here, because wouldn't another way to support these drivers be to help them actually own the asset itself, the car, so that they actually, if we move into a world where there's increased mechanization and you essentially have this class of people that are going out of a long-term kind of area of social mobility. My dad did taxi driving for a while when he was young, right? And so this has been a cornerstone of social mobility in the United States for at least 50 years. But if the future is driverless and we're moving to a world of mechanization, it would seem that it would make as much sense to figure out how to make this class of people. And again, I don't know who this class of people is, because I think like it's not like the lower 20% of the wealth distribution. It's actually a fairly large swath of society that comes in and out of these labor roles. But wouldn't it make more sense to try to figure out how do we make them capital owners?
Yeah, that is interesting. So to talk about, driving a taxi or for-hire vehicle being a like middle-class job with mobility, historically, that is extremely true. Like it has been a great job for immigrants to move to America, buy a taxi, get investment as in the form of a loan, buy a taxi, buy a medallion, and be kind of an entrepreneur and do better for your children and your family over time. That just isn't as true anymore. The changes to the logistics market since Uber and Lyft kind of won so hard in the US have actually made it a job with a lot less social mobility. And that's one of the reasons that drivers are so passionate at the Drivers Cooperative about getting a better deal for themselves, because they've just seen their wages and chances of a better life for their kids just really decrease over the past few decades. So starting there to talk just a little about where most of our drivers are at. And this has been a bit of a surprise to me. Like it's not just a paycheck to paycheck kind of life for a for-hire vehicle driver today. And again, I agree, this is not everyone. There's people in the cooperative who bought $80,000 luxury SUVs and they do very expensive rides. And, they have some things in common with the people driving a $25,000 Camry, but also some things that are different between them. But overall, there's a feeling that things are not going as well as they used to. So a lot of people are not just paycheck to paycheck, they're just day to day, right? Like we initially were paying out rides once a week. So our drivers got paid once a week because that's all our new payroll system could handle. And drivers were very unwilling to drive for us to wait a week for their wages. As we built up our platform, we now pay out daily. And that's been a huge change for our drivers. So do drivers want access to capital and to be owners? Yes, absolutely. Do they have the means to do so? Not usually, just like most workers in the US, are never going to own a stock. The approach we're taking is to give drivers shares through their labor because we're a cooperative. However, to get to the question of how do drivers become owners of this future that is more self-driving, I think that is also very interesting. I think there needs to be a system for, again, guaranteeing that these millions of workers are not left destitute if this transition happens, and it's managed in a way that maximizes stability in our society, as in not, again, making millions of people homeless. To me, that doesn't look like Lyft isn't going to just issue shares to drivers at a large scale and dilute their ownership out of the goodness of their hearts. However, I think there is a lot of room for policy here and state intervention, which will, I think, be driven by organized labor. So, for instance, if a company is going to lay off a workforce due to automation, there should either be a pension program in place, or maybe a suggestion you would like is that the shares of the company should be given to the workers who are being laid off. They should have kind of permanent ownership in the thing that they helped build, and then we're replaced through automation. So I'm very interested in models like that for sure.
Yeah. And I mean, that gets into issues as well, right? So like Jahed and I are based in Spain. What happens when you hire a worker in Spain is they essentially, you accrue a liability on the balance sheet for that worker for every month they earn. And then when they're laid off, they automatically get paid out from that liability, which has some really positive benefits. If you look at ownership in Spain, it's actually the average ownership, the average wealth in some regards is higher than the United States and the lower kind of 3/5 of the population. And so it has led to some social stability. I do think that, like, it seems to me what you're saying is that it's not that the world and the dichotomization of the world between kind of the supermajority shares in VC-backed companies like Facebook are one class and the drivers cooperatives of the world are the other class of companies that are out there. It's just that there isn't actually a middle ground that has been created thus far for financing these ventures in a way that allows for guaranteeing the rights of the worker over the course of the venture, the timeline of the venture, outside of the cooperative movement today. And that's one of the things that we really go into detail with on this pod, is trying to find that middle ground between kind of the Facebooks of the world or the Ubers of the world and the driver cooperatives of the world. But it sounds like ideologically, the reason for setting this up as a cooperative today is essentially to say, look, we wanted to institutionalize these rules and these rights for the workers. And maybe there's a better way to do this. But this was the easiest way to do this within the legal framework that we have today. One of the things that you mentioned is you think that there's regulatory policy that could support this. And you worked on the Sanders campaign for a bit. But if there were, one or two regulations that, if you had the ear of kind of the Secretary of Labor or the Biden administration, what would you want to put in place to support this group of workers or this class of workers that you're interacting with on a day-to-day basis in a better way?
That's a great question and a pretty tough one. I was against Prop 22, this proposition that passed here in California that kind of enshrined the gig labor model as something very separate from employment, does not have the rights of employment. It, was kind of framed as like a good deal for the gig workers, but there's a reason it was backed by Uber and Lyft and those companies to the tune of, I think, over $200 million. And it passed. And before I worked at the Drivers Cooperative, I just lamented this. I thought the employment model was probably better for workers. And I still think in a lot of ways it is. But something I've learned is that kind of line from Uber and Lyft that drivers really appreciate flexibility, that flexibility is one of the main perks of the job. It's not just propaganda. Drivers do really like that. They like being able to clock in and out flexibly. They want that. They also want to not be jerked around by their boss that's an app for some reason. They want like transparency and kind of fairness baked into the platform. We don't think that nicer capitalists is the answer. So there have been rideshare companies and gig labor platforms that have popped up to say, like, we're just like Uber, except we're nice, to kind of describe it simplistically. When push comes to shove, that just doesn't work, because when, under this ideology of shareholder value maximization that really does run the American market today, you just can't do that because investors will always get their way. So going back to, what kind of policy interventions would we want? I'm not sure if there's going to be one big intervention. It's probably going to be a patchwork of lots of small things that just make it easier and easier to operate a cooperative and harder to operate more extractive monopoly. So in every city across America, and probably across the world, we see local governments just at war with gig labor platforms constantly, right? Gig labor platforms are skirting the law, ignoring it, pushing the boundaries all the time, finding new ways to classify their companies that just skirt one regulation or another tax or another fee. So we've moved from this kind of system where taxis are part of the transit fabric of a city that's managed to keep the right number of cars on the road and guarantee like wages of certain kinds, to kind of an anarchic system in most places. And Uber's like, these monopolies have probably just like won in most of these markets. They've just defeated the local government, but you still see these conflicts happen all the time, to the point where, like last year, if you opened the Uber Eats app in San Francisco, I believe it called out the name of a board of supervisors member by name and said, like, if you don't like this, that we're not delivering to this island now, please call this guy's office. So, there's this conflict is still going on. So for every single one of those regulations, what I would like to see is that it's easier to operate if you're a cooperative. There are less onerous regulations. And if you're an extractive industry that takes money out of a community and exploits workers and ultimately is having a net negative benefit, net negative effect on your city, on your community, then maybe it's just harder and harder for you to get that license you need or evade that tax that you want to evade. So we can shift from, this 10% ethical consumer base to more and more kind of eating into the capitalist monopolies market share. That's, I think, the best chance for any cooperative labor platform to move to scale.
Yeah, I think that what you said about monopolies is really the key, right? Because me personally, all I'm interested in seeing is actually competition, honestly, right? Like there actually isn't a lot of it, right? And because there's privileged access to lobbying, to, I have access to a 300 million or 30 million or whatever metropolitan area audience where I can just put the supervisors, I can put the bureaucrat's name in the app, right? And have that be my leverage, right? So like things like that, you look at it and honestly, the history of the 20th century in various socialist movements, there are very interesting things that came out of market socialism and other veins of heterodox economics that kind of showed you the possibilities there. And so just to dovetail on your last point there, I think it's just, even for my version of an answer to Martin's question, is like, just regulate monopolies. We seem to have stopped doing that right in the last 100 years. And honestly, I'm simplifying it down a bit, though. It's actually extremely difficult to do so for a number of reasons, which we don't have to get into. But
we have had this, zeitgeist in the US that's different than the European Union, which is like, okay, we're just going to look at a monopoly in terms of its share of consumption in a particular market, right? Whereas the European Union has been a lot more innovative when it comes to looking at how monopolies actually act and the negative effects that they have on society.
Exactly. So there isn't it is complex, but there is already a playbook or at least a template for us to figure that kind of stuff out. So maybe step one is just saying, make the marketplace that people are competing in more fair by enacting actual monopoly regulations. And monopolies look a particular way based on certain pieces of data and inputs and outputs that happen in the communities they operate in. Could be as simple as that. So that's pretty interesting, man.
I think it's the job of practitioners and entrepreneurs to build those alternatives. Right now, we could say, and abstractly, it would be great if there wasn't such a monopoly culture in gig labor platforms. But what is the alternative? Is somebody actually saying, like, I am being stifled by the market power of these hugely funded monopolies? Well, really not. There isn't at the moment. So our goal is to create the best alternative possible and to get it as far as possible before the state needs to intervene to say that, hey, this is the actual alternative that is being crushed by the lack of monopoly enforcement in this country.
Very nice. And then just to pick up on some of the competitive things that you were talking about there at the end, you mentioned a while back, you're talking about equity, growth, and not thinking about these things at Drivers Cooperative in the same way necessarily as the firms you're competing against. Of course, you want to grow, but it's not growth at all costs. And also you mentioned that, full disclosure, I should have done this at the beginning. I am an investor in Drivers Cooperative as well, right? But that doesn't mean we're not going to ask, the interesting questions here, audience, just FYI. But so how are you folks thinking about fundraising and growth then, right? Given your structure, what is maybe at a first pass, what has been the interaction with investors, maybe outside of crowdfunding? Have people approached you? Are they curious?
Yeah. So we're closing now a round of about 1.4 million in crowdfunding. We've also raised a good deal in other loans from cooperative loan funds, as well as grants from the foundations that want to see what we're building exist in the world. What we haven't raised is equity capital from venture funds. That doesn't mean we haven't talked to venture funds. We've had a lot of really fun conversations with venture capitalists where they make it clear they're big fans of what we're doing, but it just doesn't really make sense with their LPs and based on the risk profile that their firm is looking for to invest. So we've stopped talking to venture capitalists because after having that conversation a few dozen times where, there's a lot of excitement for them.
Can you break that down a little bit? Can you break down, what are they not excited about? Is it the the one member, one vote model. And so they don't understand the governance. Is it they effectively don't see kind of the return on capital for the limited partners in the sense that they don't think you can grow fast enough? Like, what have been the objections? Because I think this is a key point around kind of equity financing for cooperatives.
Sure. It really comes down to the risk profile of equity financing. So the venture model is that, most companies you invest in will not return at all, and then occasionally have 100x or 1000x return, right? If we're not pursuing equity financing where your shares can massively grow, instead we're looking at loans that charge interest and have caps of, like single digit multiples, like you can only make 3x back on your investment or something. That just doesn't make any sense for most venture funds, because they don't want a bunch of 3x or 5x or 10x returns. They want 90 nothing returns and like 10, 100x or above returns. And that's just, there's all kinds of investments you can make in the market. That is just one flavor of investment that venture has landed on. There used to be other ways to finance businesses. You used to go to the bank and get a loan to start your local cafe or something. And that still happens, obviously. It's just we don't spend any time talking about that kind of investment. Like venture has grown to this huge level where, the coffee shops in San Francisco are all VC backed by like top tier VC firms, which seems quite ridiculous to me, but that is the reality of the market. So we're not super attractive to venture today when valuations are so high, the markets are so frothy, there's so much capital sloshing around, basically.
Which is kind of ridiculous, right? Because, and I'm not saying it's wrong. It's just it's ridiculous because if you think about who the LPs of those venture funds are, there's certainly kind of the super rich, right? In terms of kind of wealthy, very high net worth individuals with more than 30 million in assets in the United States. But the reality is most of the LPs of those VC groups are actually pension funds, right? Or other institutional investors, universities that represent the public. And so they're effectively funding a model that is actively destroying kind of the fabric of an economy to support the people that are in those pension funds at the same time that they're trying to, maximize or ensure that there is a steady return for the pension fund holders or the stakeholders of the university or whatever other institutional players and is a limited partner in that fund. So I would think that, some of these LPs would be interested in what you're doing and could actually put pressure on specific venture fund groups. I would also think that there's a set of impact investors that would be very interested and willing to take kind of more risk. But has it been the return itself and the thought process that this can't be a 100x return because these guys can't grow fast enough and they're going into a space that's already dominated by this duopoly? Whether or not it's a duopoly, I think is a larger argument, but it goes back to kind of that whole FTC framework. Or is it that they look at the governance model and they say, we don't get the cooperative? Like, can they get their head around the cooperative and it's really a growth story? Or is it actually the cooperative regulatory model that's the issue for them?
Gotcha. So first, if you're saying that capitalism is an internally contradictory system that sows the seeds of its own demise, well, I'm convinced. But
I don't know if that's what I said, but I think there is something in there.
Definitely. So, but then in the specifics of TDC, I think investors are intrigued and maybe enthused about the impact aspects of it and the self-governance aspects of it for sure. It is mostly the lack of return that makes them general partners unable to commit to the deal because it's not in the interest of their LPs, their limited partners. But I think there are paths forward from this situation. And I think we can see that in the DAO space and the Web3 space where democracy and decentralized ownership is kind of built in. But so far, VCs are also seeing those absurd returns on investment that they need to justify to their LPs. That's not to wholly endorse the Web3 space. Like, I don't see a lot of these like massive valuation growths being sustainable or based on real value, but it does mean that we are seeing venture capitalists invest in things that are nominally about democracy. And I think that is a very interesting development.
Yeah, it's funny. You just backed right into what I was going to ask you about next. So thank you very much. One of the more interesting pieces I came across, we've been chatting for a while, was a couple months ago, you published your Think Boy piece, Why Cooperatives and DAOs Might Make Sense Together. And, there's been a number of these, but I found yours to be on the much more interesting side, mostly because it's written by a person who has actual experience in a cooperative, which I think is, valuable. I'm not trying to make anyone feel bad. Anyone can do research. It's just some of it you can't get anywhere else, right? So this is, as you said, now even with the VCs circling, it is nominally and is newly established norm around ownership by all stakeholders, right? To the folks who work in them and the folks who hold tokens and the ones who founded it and maybe the ones who invested it, that much might not be as clear. It might be clear in the tokenomics, but like ideologically, it might not be clear, but it's there, right? And so, I'm obviously hugely in favor of that. It's a lot of my own investment thesis and why I'm interested in these things. But given that you wrote that a few months ago, where are you at now in your thinking on DAOs and your maybe even a potential DAO journey for Drivers Co-op?
Yeah, we're having a lot of conversations about it internally and then with potential partners and experts in the space. So trying to do a ton of research on it. We're being very cautious because we don't want to accidentally sell like too much of the company or like give outside investors real power over the workplace, which is like our goal is to empower workers here. But we're also extremely interested in the space, especially as we expand beyond New York City. It's going to take capital to launch new cities, to hire staff and management in new cities, and to help bootstrap those two-sided marketplaces all around the world. So we need that capital. And we also need to maintain the ownership and governance structures that we've built and scale them. I'm pretty optimistic about DAOs as a way to do this, cautiously optimistic, I guess I would say, at the point where, say, we have 50 to 100 cities with their own cooperatives, locally managed, running rideshare operations locally. We need a way to come together and agree on the platform and the roadmap and the overall, like the brand even. One kind of product commitment that we're sticking to is that there needs to be one little square on your phone that's called Co-op Ride, and you can open it in as many cities around the world as possible and get a ride. And it might tell you like, hey, you're in New York City, your ride is being offered by the Drivers Cooperative. Here's a little about their governance and, get to know the drivers or something. And then you open the same thing in Bologna, Italy, and it says like, this is offered by the local taxi cooperative. Here's like the brand colors. Here's like a little bit about their business. Here's what cut goes to the driver and to the business and whatnot. I think this is a pretty compelling product experience. Then figuring out how to govern that is interesting. So we're thinking of it as a federation of different cooperatives that come together to form a producer cooperative. That's a term your listeners might know, but like commonly you see like Land O'Lakes Butter in the US. That's a producer cooperative of a bunch of dairy farmers getting together and making a brand and product around their commodities. So what does the producer cooperative look like for the gig labor space? That's kind of what we're trying to figure out. And then how do we govern that? Like, there's actually a lot of different entities there that have competing interests. So there's every individual driver. There's the local cooperatives themselves that are formed of drivers in a locality. And then there's the platform overall and the staff and management of that platform. So I guess the way I'm evolving to think about like the DAO is that it's not some revolutionary new idea. It's a lot more boring than that. It's basically a better and evolved LLC where all the kind of particularities of a business and control of a business or an organization are just made as explicit as possible. So that's what we're pretty interested in. Right now, my entire team's focus is on getting drivers in cars and passengers in cars and operating, our platform, which is very new. And we're building features one day and they're being used the next day. Like that we have very little time to stop and explore, idle curiosities for the future. So we haven't put as much engineering work into building the DAO as I would like. But as we stabilize and grow sustainably in New York, then that's going to be one of our biggest focuses.
That's phenomenal. Very exciting. And I have so many questions. So let's kind of take them in turn here. So I think like thinking of your platform almost as a composable, basically what you described as like a composable platform where you could have any number of cooperatives happening in any geo that all kind of roll up into the rails that your team, that your worker owners have built, right? I guess you could call them the tech worker owners. Well, they don't necessarily own a class of shares yet, correct?
Due to some organizational debt, no, but like we plan to fix that at some point.
So like you were saying, this kind of becomes a composable white label thing that has a number in any geo potentially. You could have sub DAOs roll up into a bigger DAO that's the Drivers Cooperative itself. And that presents a lot of really interesting interfaces, ways for people to interact with this technology. And so maybe that's another thing to kind of poke at and see what your opinion is. In my interaction with DAOs, I've been in them for about over a year and a half or so. I am still a DAO skeptic myself. That's kind of position myself when I talk to folks, just because the evolution of these interfaces and the ways to interact with this technology are still so nascent, right? And so when you think about this from the perspective of like, having a great experience as predictable as picking it up in any other city, like you said, and hitting one app button on your phone. How about from the perspective of drivers and getting them, wallets and all these other things that might actually come into play? Where do you think your particular population of folks is in adopting this kind of technology?
Yeah, good question. So one thing I love to tell people about is how every time I am working with the driver and looking at the app on their phone and then looking at their phone, they all have Coinbase installed, right? Because gig worker, like Uber drivers, don't always think of themselves as workers. They think of themselves as entrepreneurs, and that's accurate, right? They've invested in a vehicle, they've started a business, they're working on a platform that disempowers them most of the time, but they're of an entrepreneurial mindset. Again, almost all immigrants, so there's like a hustle to it, right? And crypto and speculating on crypto is where like hustle mindset is right now. That doesn't mean that they understand, quadratic voting and like self-custody and whatnot, but that's a starting point for sure. On the technical side, I think, a massive gig labor platform built on Web3 is going to need pretty complex tokenomic structures. I think there's going to be probably several tokens involved, one to the meta organizations, like the federation that owns the brand, or some to those stakeholders, some to local cooperatives and the management thereof, whose interests are in growing and sustaining local cooperatives, and then workers themselves, who ultimately are the people that we care about the most here. So there's going to be, complex structures with complex contracts that are all custom made, I'm pretty sure. But you can, with some effort, you can put a UX on that is like not completely atrocious like where it is today. I've seen some decentralized applications now that kind of bake in a wallet, and it's a hosted wallet where you're not really self-custodying your keys. But then if you want to move to a self-custody wallet, it's kind of a flow that's supported, so that expert users and people who are paranoid about managing their own shares and property themselves are able to do so, but most people aren't. At Facebook, I worked on the Libra project for my last 2 years there, and this is something we looked at a lot. Like, we want to support self-custody, but also we want to be a kind of the first like extremely user-friendly system where people don't have to think about it if they don't want to, if this is their first experience doing so. Not like Libra worked out, but I think some of my learnings there were that you can actually make these compromises. It just takes a lot of work. And right now, I think the Web3 community is way too inwardly focused, where there's a lot of DAOs about building DAOs, about building wallets, about building, Web3 tools. And that makes sense to a degree because this thing is bootstrapping itself. That's not my interest. My interest is in building a functional business that's ready to scale, and then using Web3 technologies as an implementation detail to do so. Got it.
And then I think the Web3 side of this, as you mentioned, is, at this point in its life cycle, it's kind of at this point where the VC money is chasing it. And, like you said, every single person is in driver's co-op, you're doing user research, you'll see a little Coinbase icon. That's awesome. I think what you pointed out here with Facebook is really interesting though. And so maybe in the last few minutes, we can poke into that a little bit. I know you were an early part of the DM project, and that project has now, I think it became, was it Novi? And then Novi was shuttered and that team had left, right?
Basically, yeah, everyone is rolled off. It was Libra became DM, Calibra became Novi. I worked more on the product side, on the Calibra Novi side, but was there one of the first like 5 or 6 engineers on the whole project. So I got to see the Libra DM blockchain evolve as well.
Got it. So then like with this, it's really interesting from the perspective of like of the failure for a big institution to kind of make that make sense, right? So now with you on this side, almost you're looking at it from the other end where you've started from a very small, and there are nascent technologies in Web3 that can maybe help you scale and get scaling in governance, maybe not necessarily scaling in technology and distributed engineering and scaling side. Looking at this from the Facebook side, maybe you're on the inside to the extent you can. Why did they kind of fail to adopt this technology? What happened in your experience?
Good question. I mean, there are probably like cultural and product reasons, but then the regulatory reasons loom largest. I did notice that Libra was built in a pretty different way than most things at Facebook. At Facebook, like I said, it was a very democratic culture, very bottom-up culture in some ways, where a lot of big features were actually developed by engineers or small teams at hackathons, just putting things together, trying them out, getting early feedback and iterating. That's kind of the DNA of Facebook. Libra was built in a pretty different way where, a couple hundred people were hired to work on it before, even the product vision was really solidified. It was kind of how I imagine like the US Army approaches a problem, just like hire some generals, hire some folks under them and some folks under them, and then start hiring the bottom rungs of the ladder. So that I think was so culturally different within Facebook that it just wasn't set up for success. And when people didn't have that kind of experience, and Facebook is obviously a massive corporation that acts like a massive corporation, but in like the product way, I don't think it does. It doesn't usually do this kind of top-down thing. So that was difficult culturally. But then this kind of space, you kind of need that top-down approach, because the big question was always going to be, is this going to pass regulatory muster? The very high-minded ideals of Libra were to kind of create a global reserve currency that was not controlled by central banks. That was controlled by this consortium of organizations, including like universities and think tanks and research institutions, but also just the big corporate finance monopolies of the world, the PayPals, the Facebooks, and other banks like that. So it turned out that, even taking like that best case to like regulatory agencies in the United States was not good enough. So it got and then the Facebook brand was a big albatross around our neck, I guess, because, it was the kind of a low point for the Facebook brand, and no regulator wanted to say like, yes, I support Facebook controlling global currency flows.
And then trust government. We can trust Zuckerberg with all of our money. And so let's just get rid of every single central bank.
Pretty much.
Cool. So you have a super interesting background, man. I love chatting with you about this, about your co-op experience, the evolution of yourself and your awareness, the worker and labor organizing. You have such an interesting background to, especially ending here on this note with Facebook. Stepping back and kind of seeing where you're at with Drivers Cooperative, the stuff you mentioned around Facebook's failure had a lot to do with regulation and top-down stuff. And my bull case for cooperatives is that at the end of the day, if you empower people with not necessarily, ownership is important, of course, but voice processing and information asymmetries that exist in other organizations that I don't necessarily think, at least they'll be more amenable in co-ops. Looking at it now from your experience there, coming out of Facebook and going to Drivers Cooperative, what do you think? How does that apply to Drivers Cooperative and where you folks are going?
Well, one learning from like my experience in big corporations is that the investment necessary to create massive amounts of value goes down over time. That's a cool thing about capitalism, I must admit. So, I transitioned from Microsoft to Google to Facebook, and each of these were kind of a new generation of how tech is done, and created value in a leaner and leaner way, where like Facebook had roughly a tenth the employees of Google at the similar level of valuation in their history. And I think that trend continues as WhatsApp had like 20 employees or something when it was acquired for billions and billions of dollars. This trend of small teams being able to create massive amounts of value in this economy is continuing and accelerating. I'm quite certain that building our platform the way we're building it now wouldn't have been possible even 10 years ago. But we're using, best in class open source technologies. We're deploying everything on Kubernetes. We're using React and React Native, these technologies built inside Facebook, and doing a lot with a very small team. Uber has many thousands of engineers. We have 9, but we're going to build a product that is, within striking distance of quality in a lot of cases of these much bigger platforms. So I think this trend is going to continue, and we're going to try and help accelerate it. Some of the things I'm most excited about at the Drivers Cooperative is our vision for open sourcing more and more of the platform. We're kind of developing a few of these technologies in stealth right now, but they are technically open source, where the hardest problems in a gig labor platform are kind of the same across all of them, whether it's DoorDash or Uber or even like a job platform. So even if you're building a TaskRabbit, a lot of the things you look for are the same. You have a worker, a provider, a customer, a real-time matching algorithm, geographic services built in. And then you have a front end on top of it that, relates these concepts to your user, your business case. So why not build one of these marketplace engines that does the matching and then share it across lots and lots of different verticals with lots and lots of different organizations? I know that hundreds and hundreds of people at these gig monopolies work on these platforms, optimizing them. They have PhDs in economics. They're like, really, really advancing these technologies, but they're closed source. So one of our projects is to build that marketplace engine, but in open source, and hopefully accelerate the development of other gig labor platforms. Over time, I think we'll open source more and more of our platform to try and help drive the cost of starting a gig labor cooperative as close to zero as possible. So we'll have more and more competition in this space. And if we're able to organize through governance mechanisms into like federations or organizations that can work together, then we can actually start to challenge these monopolies.
Very cool. And that might be one of the superpowers of Web3, like you said, making it a fork instead of just a repo that someone has, then can be a way for you to bring the governance mechanics and the wealth generation and ownership mechanics along for the ride. That's
Definitely.
super cool, man. Well, last thing that being, that we always like to give folks an opportunity to shill. So tell us where we can follow you online, follow your work, and see and Drivers Cooperative as well, if you want to tell everyone where they can learn more about it.
Definitely. Thanks a lot. So you can see the Drivers Cooperative at drivers.coop. .coop is our TLD. We're wrapping up now our crowdfunding campaign for debt investments in the co-op. So if you go to drivers.coop, there'll be a link on top. You can also find us on WeFunder. To follow me personally, mostly I just live on Twitter. So I'm at Jason P. Jason on Twitter. A couple times a year, I'll write an essay on my Substack, like we talked about. That's venturecommune.substack.com. And I'd love to talk to more people about this space. If you know a lot about building DAOs and building governance for real world organizations, then I would love to talk to you and see if we can learn from each other and what we're doing in TDC.
Thanks a lot, Jason. This has been awesome.
All right. Thanks, Alan. Great talking to you.